Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's 10 p.m. Pacific time. The date is November 25th, 2022. If you can hear my voice, you made it. Welcome to the weekend. Now let's get to work. One thing that's drawn a lot of attention is this situation with MetaMask and IP addresses. Have you heard about this? What's going on is, on the 23rd of November, Consensus revised their privacy policy agreement. And this revision means that MetaMask will start collecting users' IP addresses as well as Ethereum addresses during on-chain transactions. That said, Consensus explained that this will only happen when using the default MetaMask RPC application, Infura. If you're running your own Ethereum node, or if you're using a third-party RPC provider, then MetaMask won't be collecting that information. In that case, it's the terms of the other RPC provider that apply. Consensus has said that this information may be disclosed to affiliates during business deals or to comply with KYC and anti-money laundering laws. Now, MetaMask is one of the more popular self-custody options on the market. It has more than 21 million users. So keep that in mind when I say that the reception has been largely negative. For example, Adam Cochran said, quote, "There's nothing more important than consumer privacy, especially when it comes to your financial data. You have a right to be anonymous. MetaMask has provided a great free service for a long time, but their decision to log IPs and to tie it to transactions is unacceptable." Hayden Adams is the inventor of the Uniswap protocol. He took the opportunity to point out that Uniswap does not track IPs, and third-party trackers aren't allowed on the platform. And we have to remember, this is in response to increasingly stringent regulations, but I don't think this is the right way to go. However, for their part, Consensus is not backing down. In fact, they've released a statement to talk about what they intend to do with the data. They said this isn't really new, that their policy has always outlined what data is automatically collected, including IP addresses. They said that the only difference here is an explanation of how Infura works with user data. They said MetaMask doesn't collect internet addresses. It's only when you use Infura apps does the data collection happen. So the only language that the policy has changed, not what it means. Now, reportedly, Infura is looking in other ways to, quote, maximize the collection of personal information, anonymization techniques, and minimization and elimination of any data collection and retention. I think what's going on is MetaMask is rightfully getting more attention in the wake of FTX's collapse. This is good. People are reading the fine details of what they're agreeing to. This is good. Now, preferably, I'd see people getting hardware wallets and not software wallets, but any form of self-custody is far and away superior to leaving your money on an exchange. And I think some of the pushback might be because folks are feeling a bit nervous about where they're putting their money. And they're asking questions, and they're poking at things before investing and not after, which is a good thing. Now, let's take a look at the Russians, because something kind of surprising is happening there. Russian legislators are trying to figure out the amendments needed for Russia to launch their own crypto exchange. Now, if that's not shocking enough, let me throw in that both the Ministry of Finance and the Central Bank of Russia support this idea. Now, somehow, they've overcome years of disagreement over regulation of crypto. The Duma is the lower chamber of the Russian parliament, roughly similar to the House of Representatives in the United States. Local media reported that members of the Duma have been in talks. They're looking over the amendments for their current crypto legislation. Now, that bill is called On Digital Financial Assets, and these amendments could form the foundation of a national exchange. That is, if the central bank continues to agree. Sergei Altuhov is a member of the Duma's Committee of Economic Policy. He presented the value proposition for such measures. Quote, "It makes no sense to deny the existence of cryptocurrencies. The problem is they circulate in a large stream outside of state regulation. There are billions of tax rubles for lost tax revenues to the federal budget." And I can get behind that argument. People are going to trade crypto. That's just how the world is anymore. Instead of foolishly fighting it, instead of battling the inevitable, it makes much more sense to harness it and use it for good. Anatoly Askakov is the head of the Duma's Committee on Financial Markets, and he said that this exchange could be a part of the Moscow exchange, something he characterized as, quote, a respectable organization with long traditions. And it was just this last September that the Moscow exchange drafted rules that would allow the trading of digital assets. In addition, there was a bill introduced earlier this month. This bill would legalize mining for crypto as well as selling off the mined currency. Now, this would be a viable platform for Russians to offload any crypto that they mine up. Legally speaking, Russians are allowed to use foreign exchanges, and in fact, doing so might be a little advantageous. Russian currency controls and regulations don't apply to foreign platforms. However, users would have to report any gains to the Russian tax service, and right now Russian nationals are having a hard time finding service on foreign exchanges. Now from Russia, let's take a look at nearby Uzbekistan, because they're shutting their borders to unlicensed crypto firms starting in January of next year. This is in preparation to launch their own cryptocurrency framework next year. Uzbek regulators have been issuing regulatory approvals to local virtual asset service providers, or VASPs. The National Agency for Prospective Projects, or NAP, is Uzbekistan's leading crypto regulator. They have already issued the nation's first crypto licenses. Currently, there are two of them. One for Crypto TradeNet LLC, and the other is for Crypto Market LLC. This license allows, quote, cryptocurrency stores, like these, to offer crypto services in the country. Weirdly, neither of them have working websites at this time. The license NAP is granting is based on a presidential decree from April of this year. This decree established rules for crypto assets in Uzbekistan, and they included a warning in their statement. It says, quote, crypto shops are designed to provide easier access for citizens to buy or sell crypto assets. The agency urges citizens to be as vigilant as possible and not to use the services of electronic platforms that have not received a license to operate in the Republic of Uzbekistan in the prescribed manner. Now keep in mind, it was not all that long ago that Uzbekistan blocked a number of the big global exchanges specifically because they don't have a license to offer VASP services. These are big players like Huobi and Binance. However, that was of limited effect. Users could still access those websites through the use of a simple VPN. And so these latest licenses are meant to shore up any weak areas in the local crypto ecosystem. This lets them get ready for January 1st, when only licensed crypto firms are allowed to operate in Uzbekistan. Speaking of Binance, they published official Merkle tree-based proof of reserves. It was a couple of weeks ago that Binance pledged to make this proof of funds available, and now they've published the results of their work. This announcement came from CZ's Twitter account earlier today. Currently, it only works on Bitcoin, but Binance posted on their website how users can verify their holdings. More coins are expected to be added in coming weeks. One thing that they highlighted was their coming transparency updates. This includes things like implementing ZK snarks as well as inviting third parties in to audit their proof of reserve results. Shortly after FTX collapsed, Binance announced their intention to develop these proof of reserve results. And it wasn't too long after announcing their intention that Binance released the public details of their wallet addresses as well as on-chain activities. In other Binance-related news, CZ was on Bloomberg TV yesterday when he's talking about their proposed industry recovery fund. It looks like Binance intends to donate $1 billion for it. Now, CZ said the details for the fund will be published to Binance's blog in days ahead. Now, regarding their structure, he said, quote, there's been back and forth on how to structure that. Do we make it a loose fund or an actual fund? I think we're kind of going with a loose approach where different industry players will contribute as they wish. He said this fund is expected to go live by the end of the year. Interestingly, he also said that Binance was interested in picking up some of the assets that belong to Voyager Digital. In fact, CZ said that Binance would be looking into acquiring some of the businesses and assets owned by FTX. 7 other companies have joined the effort. Jump Crypto, Polygon, Aptos, Animoca, Kronos, and Brooker Group have all committed to participate with an initial $50 million committed between them. Some 150 companies have been invited. Speaking of FTX, more FTX fallout. Binance is delisting 3 Serum trading pairs. It was announced today that Binance was terminating the trade of Serum to Binance, Serum to Bitcoin, and Serum to Tether trading pairs starting November 28th. Now, Serum is a Solana-based decentralized exchange protocol with a weekly airdrop of Serum tokens. This is really bad since most of the trading Serum sees is on the Binance exchange. Last night we were talking about Turkey and FTX. Well, things have progressed. Turkey's Financial Crimes Investigation Board has seized assets belonging to Sam Bankman-Fried. This came in an announcement that outlined the steps the Financial Crimes Investigation Board has taken against SBF. There are apparently three major points in this investigation. One is that FTX was found to have failed to store user funds safely, and that they're guilty of embezzling consumer funds as well as manipulating the market. Now, that's an interesting accusation because it comes from the idea that FTX was selling crypto that wasn't backed by actual crypto holdings. So that's called market manipulation. Now, at present, FTX Turkey's website is still up, but it just talks about what we discussed last night, how users can get refunded for any funds stuck on the exchange. And as a result of the implosion at FTX, people are asking hard questions. Some of those questions will soon be leveled at Securities Exchange Commissioner Gary Gensler. The biggest question is, what more could the SEC have done? Now, we know that Bob Menendez is planning on asking some of those very questions. The senior senator from New Jersey has already said as much. And in other legislative house, we have Representative Tom Emmer. Now, he has concerns about SBF's petition for a no-action letter request that was ultimately never granted. Jake Chervinsky is an attorney for the Blockchain Association, and he wrote that he wants to know why the SEC didn't see this coming. There are some who are questioning Gensler's priorities. Coy Garrison is an attorney, formerly worked for SEC Commissioner Hester Pierce. They said, quote, obviously the SEC is not to blame for what happened, but there's some valid questions being raised about where the SEC has been allocating their resources. Pat Toomey is the retiring senior senator from Pennsylvania. He is advocating caution and understanding. He said, quote, I'm not sure there's an SEC issue here. Let's remember, most of the problems originated with an offshore exchange, and I'm not sure the SEC jurisdiction reaches there. There's a lot of facts and circumstances that I would need to know before I could answer that question. Which is a fair point. FTX is domiciled in the Bahamas. There's limited action available to Gensler in that case. Senator Cynthia Lummis of Wyoming also suggested caution before blame. Quote, knowing that it takes anywhere from 1 to 3 years to develop an enforcement action or for an action for fraud against a company as complicated as FTX, it would have been really challenging to do it in the time frame that FTX has been up and running. Now, I've been critical of Chair Gensler in the past, when I think it's warranted. I'm not sure that it's so in this case. A lot of people were surprised by what happened. A lot of people who put themselves forward as experts were taken in. And it takes time to build those cases, 1 to 3 years, according to Senator Lummis. But perhaps the biggest consideration is that Gensler is all about securities. So to put the onus of FTX's implosion on Gary Gensler would mean that you classify all crypto as securities, which would allow him to regulate them. I'm not convinced that's the right course of action. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. And I invite you to come back tomorrow night. We have a very special interview I don't think you're going to want to miss. We'll see you tomorrow night.